So, what's the most important lesson that you've learned in your real estate journey?
I would say partnerships. Yeah, that's the most important thing. Forget about finding perfect deals or anything like that. The first thing you should be looking for is partners. Don't just jump in with them. Literally, just find out who they really are. Like, not just if they know stuff, that will come. It's fine, as soon as you raise. So, it's really important to connect with people that can really help you grow faster. So, let's say there is an amazing deal, like amazing deal, but you need to raise 10 million. Ask yourself, can you raise $10 million?
So, do you have like a minimum entry fee, like amount?
Typically, it's 50,000. That's kind of straightforward. That's typical. We kind of go from 50 and up. It's just easier on accounting, and it's just better numbers that way.
Welcome to another episode. I am your host, Marco Cabrera, and today we have a special guest, my boy Vlad. He is the brains behind Zontic Ventures, a company he started to secure financial independence for his family and investors. Vlad's portfolio boasts hundreds of units across the Midwest and Sunbelt markets, and he's aiming for the stars with the goal of owning 25,000 units. So get your notepads out and get ready for my boy Vlad. Vlad, what's up, man?
Hi, everyone. Thank you so much. Thank you so much for having me.
No, thank you for being here, man. I know we've been really trying to sit down. Your real estate portfolio and everything that you've done is super awesome, man. I just want to share it with the world. That's why we're here.
Yeah, it's a lot of fun. It's been a really exciting journey.
Yeah.
Really is. There's never a dull day or never, uh, I don't know, a simple or boring transaction. All of them are just absolutely different, and one is crazier than the next.
Yeah, yeah. It's never a dull moment when it comes to real estate. Yeah. So, what inspired you to get into the world of real estate? Why don't we
Yeah,
start with
well,
that?
I started being a graphic designer, and it had nothing to do with real estate whatsoever. I had a W two, and I was secure and safe. And I ultimately reached the highest point that I could. Basically, I was right under the manager in that department. My job was awesome, and then COVID hit, and I got furloughed. And first few months was fun. You get like unemployment, and then I'm thinking, hold on a second, am I going to be called back? I don't know where the next paycheck is coming from, or when is it, if ever. So we started thinking, me and my wife, because we have two kids, also we have mortgage, and we're thinking, what can we do here? So she suggested I become a real estate agent, because if you think about it, I'm in New Jersey, but that's anywhere, right? People need to live somewhere. They buy and sell houses, so it's let's try that to substitute uh, an income stream. So I passed my test during COVID. It was interesting on its own. Everything is done virtual, no in-person meetings or anything like that. And then I started buying, selling houses, and then I went to a few networking events with masks and everything. So yeah, it was, distancing like 6 feet. Everybody sitting, and kind of, the brave ones that came out during COVID to networking events.
Yeah.
And people were like, "Oh yeah, why don't you try wholesaling and flipping?" And that took me on a path to that. I've done few there, but I knew that there has to be something more out there, because even though you can do okay with that, but what I needed was passive income, and so
Yeah.
I got some rentals here in New Jersey, and shortly realized that it's not scalable as fast as I wanted to. I just couldn't scale. So that took me to path to multifamily. I've taken, I went on few events. The major one that I went to that year was the one in Houston. And after I met thousands of people that are doing and crushing it in the space, I immediately realized that was for me. And I quit my W two by then, and still am a licensed real estate agent here in New Jersey. That's what I do for active income, because why not?
Yeah.
And when it comes to multifamily, yeah, we purchase and buy multifamily primarily in the Midwest, Sunbelt, and now we're buying in Carolinas as well. So it's been quite a journey.
That's awesome, man. So, all right. So initially, when you got into real estate, you were you bought, buy, and hold. So I guess it was single family that you were
Yeah,
buying.
yeah, we bought single family, and um, it was actually quite profitable. I can't really complain.
Mhm.
We're getting $1,000 a month net, so
Wow.
12 grand a year, passive cash flow. But I realized that in order to have, to basically replace my expenses, I needed a bunch of more houses like that. And it's not really, I didn't see a lot of potential in that because in order to buy, let's say, 10 of them, you need to do 10 transactions and then you have in different locations and I can't manage everything by myself. So I needed a property manager, and it's 10 different roofs, 10 different, foundations I gotta take care of, and tenants all over the place. And also, one big thing that I noticed is that if a tenant is not paying, then you're losing all your money, everything gone. Like for example, there's a turnover, right, of 1 month, so you lose a month worth of rent, so it's technically, 11,000 you're making, right? Then you have repairs and this and that. And I'll never forget all these crazy calls like, oh, the toilet overflowed. I'm like, well, flush it or use a plunger or something. I mean, the person's calling me. I'm like 2 hours away. I'm like, use a plunger. Or there's a smoke detector beeping. I'm like, you cooking something? No, it's just beeping. I'm like, well, just change the battery. That might be the solution. It's just like simplest thing. And last call was just absolutely nuts. So,
Nice. So when you sold them all, were you able to make some profit on it?
oh
Did you
yeah,
make a decent
I,
return?
I made profit. Yeah, we were holding them for 2 years,
Okay.
and that was back in the day when the market was on an
Mm,
upswing, and we pretty much sold them at the peak of the market. So
wow.
I can't really complain. I made good money on them. Yeah,
Good.
it was a huge win. Yeah, I'm very happy that I have done that.
That's awesome, man. So fast forward, why don't you tell us more about Zontic Ventures and the vision behind starting that company?
Yeah, so we figured we should start a company to acquire large multifamily properties together with our partners, and it's just Zontic Ventures means it's basically I was born in Russia, right? So I got here 30 years ago, but Zontic in Russian means like almost like an invisible umbrella, almost, right? It's an umbrella, but it's kind of a play on word where um, everything in the universe, right? It's kind of looking out for you. I know we're going deep now, but everything is kind of covered with an umbrella. So if you're a good person and you have good karma and good energy, this invisible umbrella will kind of protect you, right? And make everything good. So that's the thought behind Zontic Ventures. So we made the company, and now with partners, we purchasing very actively in Kansas City market, Dallas, Houston. We bought few there. Our very first purchase was, I know it's not in our market, but it was in Sarasota, actually Bradenton, Florida, right there. We're trying to exit that. It was a land development, land flip, I should say. We're
Okay.
trying to exit that now, and other projects that we're doing are in Carolinas, north and south.
Nice. Nice. That's good. So you've chosen to invest primarily in the Midwest and Sunbelt markets.
Yeah.
What drew you to these areas?
Well, listen, it's really simple because I'm in Jersey. It's not very landlord friendly state.
Not at all.
Prices here are just crazy.
Yeah.
You can
Pretty
yeah,
straight out, right? Like that's what it is.
you can still buy. A lot of
Yeah.
my friends buy here, and they're
Yeah.
very successful. It just wasn't for me. So I prefer to kind of focus on more landlord friendly states that are business friendly as well. So those markets would be, let's say, in my case, Kansas City. There's a lot of growth in there. So also, of course, Houston. We're not as active in Houston anymore due to just higher based on now it's June. of 2024. So the insurance rates are just absolutely ridiculous. So we kind of stopped being as active in Houston and focusing more inland on Dallas. And same thing with the Carolinas. Yeah, it's much better in the Carolinas. It's just we see a lot of growth. There's a lot of potential. A lot of companies are moving to DFW, for example. They're calling it
Mhm.
like second Wall Street or Wall Street of the South or something like that, whatever they call it, because a lot of Fortune 500 companies are moving their headquarters there. It's just
Yeah.
a more favorable space for companies, and of course, everything else is going up. I mean, it's driving the economy, and people are moving there as well from like California. They're moving there from New York, the whole Northeast region. So we like that market very well.
That's good, man. I love the fact that, you're based out of New Jersey, but you're willing to do business outside the state. I think a lot of people get stuck. They feel like they have to be able to drive to their properties, like 5 minutes, but that's not the reality of it. Our
Mhm.
first rental properties that we picked up were down in Atlantic City. That's 2 hours away from us. And now we're all the way as far as in Florida. And yeah, we're doing two new builds down there, and you're able to manage it as long as you have the right systems in play. Right, you got the right people to work with that you trust. You can really manage as long as you have a system.
Yeah, I mean, the most important thing is we have boots on the ground in each of those areas.
Yeah.
So, like for example, let's talk about the Carolinas. We have a very reliable person living there, and right like 30 minutes away from our properties. So we feel that we can manage it remotely. Plus, being an asset manager really doesn't matter where you are, right? We have a person living in Uruguay and successfully buying properties in the United States. Another
Yeah.
person, not my partner though, but that I know, he lives in New Zealand and he's buying in Arkansas. So you can be anywhere in the world as long as you have partners here that are solid enough and you can trust them. So you can manage a property from anywhere. It really doesn't matter. Yeah, I kind of get the idea that you want to see them, but I honestly don't want to see them. I have no reason to go and see the building because I can just call my partner and say, "Hey, listen, drive by there, take a look, and let me know what you think." And if worse comes to worse, I mean, I can just fly to the Carolinas. It's a 2-hour flight. I mean,
Yeah.
come on, it's no big deal. So it. I think it's just some sort of mental block by not buying over there. It's, I don't know, I have nothing but good things to say, but most importantly is partnerships. If you're going to buy out of state, the most important thing is to find solid partners that you can trust.
Yeah.
So the team is number one priority.
Yeah. Yeah. That's good stuff right there, man. That's good. So, what was your biggest purchase after you got out of single family? What was your next multifamily purchase?
Well, actually, the first purchase was a joint venture. We bought that land in. It wasn't the largest. The largest was that we were involved in was 400 doors in Texas. That's the largest so far by now. But the one that as soon as I got out of single family space, we got this land. So the play with it was, it's like 5 parcels, right? So we are gonna assemble them and rezone them for
Mhm.
multifamily developer commit to come in and do
Mhm.
their thing, because I'm not a developer, and it's like I said, it's a small joint venture that we've done, and now we literally finished with it. We're in the process of selling it. The developer can choose either to build 96 luxury units, or they can go for, let's say, more subsidized units or less square footage, and they can build, I believe, like 180 of them or something like that, depending on parking situation, and also there's like wetlands in the back.
Yeah.
So yeah, there's multiple exit strategies there. So that was my very next project after I exited single family space. So it was fun. I'm not doing land flips anymore. It's just not my thing. I like to focus on what I know, which is multifamily. But
Mhm.
it was good to venture. I learned a lot.
Yeah, that's pretty awesome. So, yeah, so you were doing single family. You got your license, right? Just want to backtrack a
Yeah.
little bit. Now, I'm pretty sure what you do now, you didn't learn in real estate school, right?
No, not at all. No, no.
Yeah,
When it comes to multifamily space, yeah, I got a mentor. There's a lot of mentorship groups out there. Make sure if you're gonna join one, do your due diligence and don't jump on the first one,
yeah.
because they cost a lot of money.
Mhm.
So speak with them. Speak with a lot of them. There's, I don't know, I can just think top of my head at least six, seven that are like
Yeah,
big nationwide companies
mhm.
that provide services like that, and make sure that you vet the people that are running these things, right?
Yeah,
Because I see a lot of people, as soon as they do one deal, they're like, oh, okay, I'm going to be a mentor now, and which is just silly. They don't know anything.
yeah,
So it's really important to look at their track record, how many deals they've done. Of course, look at the reviews, ask people, ask, because don't forget, multifamily community is very small, it's tight, and everyone knows everyone, like literally. So if you want to know how's this mentorship or that mentorship or something like that, if I don't know it, I'll connect you to somebody who does, and
yeah,
you ask for their honest opinion, because honestly, they're expensive, but they're worth it. They will accelerate your growth
mhm.
tremendously.
Yeah, that's good, man. So what are some of the biggest challenges you've encountered in managing such a large portfolio?
Um, it's I would say partnerships. Don't jump in too quick. That's the most important thing. A lot of people get too eager and they're like, "Oh yeah, this is awesome," and just jump in. Like you see those posts on Facebook. I'm on all over social media, on like LinkedIn and Facebook and stuff. And on Facebook, I see, "Oh yeah, I have this awesome JV deal coming up. Who wants to join me?" And I think I'm like, what kind of silly question is that? Are you really going to be in a joint venture with somebody who you don't know? Like, you
Yeah,
have no idea who they are. Let's say you can even interview them and be like, oh, yeah, come on. Let's buy this huge $5 million building or project together. I mean, it's
yeah,
silly. You don't know what kind of
yeah,
person it is. Are they serious? What are they doing? You don't know. It's like
yeah,
it's like marrying somebody on a second date. I mean, come on.
yeah,
Yeah, there's good few fun stories. Yeah, I'm not
yeah,
gonna say
yeah,
it's all bad, but in 90% of the cases, it's going to crash and burn. It doesn't matter how good the deal is. It's all about partnerships and execution. So it's really
yeah,
important to vet your partners, and that's the number one thing. And number two is, don't look at like every deal out there. Like I said, make sure you have the team together first. Because I'll give you an example. Let's say you find an amazing deal in, I don't know, Cincinnati, right? Like
mhm,
I find a deal in Cincinnati. I don't
yeah,
have any partners in Cincinnati. I wouldn't
yeah,
know how to buy it, so why would I even look there? So,
yeah,
so the biggest challenge is finding partnerships, and don't rush into things. Because don't
yeah,
forget, if it's a joint venture, yeah, it's your money. But if you're syndicating, you're bringing other investors in. So if you're going to lose your money, yeah, it's going to hurt. But if you're going to lose your investors' capital, yeah, your reputation will be ruined. So
yeah,
it's really important to be very careful on what you're doing, and that's another thing when it comes to mentorship. For example, like when I joined my mentorship, I was given an accountability coach and an underwriting coach.
mm,
So every deal that we looked at that was really, really close, we gave it to the underwriting coach, and we're like, "Hey, listen, can we go through this bottle together and see, if doable?" So he poked so many holes in it. We thought it was an amazing deal, but he has like 25 years of experience, right?
yeah,
He's like, oh my gosh, overall it looks good, but if you dive deep and really analyze the numbers, it's a horrible deal.
yeah,
So he really saved us from, I would say, losing a lot of money, and ultimately staying on course. Don't rush, because it's a big project.
yeah,
And one thing that I wanted to mention is that, yeah, you're looking for deals, you're going to buy one, but don't forget one thing. You have to operate it now. And if you have a full time job, if you have a W 2, for example, or do something,
mhm,
how are you going to operate it? How are you going to
yeah,
run it?
mhm,
Because running a business, it's 24/7. You have to be on all the time, or you have to have a partner that does it all the time. So I
yeah,
hear from people, They come to me and I'm like, listen, we have an opportunity to be a limited partner, so why don't you get in? It's awesome to learn. No, 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 I want to be an operator. I want to be a GP. I'm like, okay, that's fine.
Yeah.
Yeah, if you want to be a GP, perfectly fine. But every GP earns their pay. Do
Yeah.
you have money? I mean, do you have time to work on this project with us? So we have twice a week, we're going to have property management calls. And then,
Before you move forward, why don't you let our audience know what a GP is?
oh, general partner. So it's basically you have a general partner who basically finds the deal, who runs the deal, who brings in all the resources that's needed. And you have limited partner that really basically they want to be in real estate, but they just don't have the time. They don't have the knowledge. They want to be in it, right? So they let's say they have a lot of money. They're looking for 1031, or they have retirement accounts. They're looking to invest in real estate, but they just, let's say they're too busy at their W-2, and they
Mhm.
still want to get in. So
Yeah.
that's one of the ways you can join a team and buy a project together. By being limited, that doesn't mean that you're limited to the information. It's not. You get everything. You get all
Hmm.
the reporting, you get all the numbers and everything. The only limited part is that you don't get to make any decisions, which is
Yeah.
fine. Ultimately, you get paid out first, being a limited partner, so it's a win-win. And
Hmm.
your typical return is, I don't know, 20%. So accumulative return.
Of
So
course.
overall, it's a huge win to be a limited partner in a syndication.
Yeah.
So yeah, that's the most important thing here. So it's I think you have to really prioritize. If you don't have the time to run a deal, and I've
Mhm.
seen many people like they bought a deal, they're so happy, because we underwritten like 100 deals, bought one, awesome, and then the deal fails because you have to run it now. You have to run it for five
Yeah.
years. Do you
Yeah.
have the
Absolutely.
time
Hmm.
jump on calls and run the deal or business? Think of
Yeah.
it as a business for 5 years until you exit. Do you know anything about it? If you
Yeah.
say no, or you're too busy, then being a general partner is not for you. Being a limited partner is the best option, because you
Yeah.
still get to benefit, you still get to learn, you still get to be on calls. We report everything to limited partners, all our profits and losses, any questions we're here to answer. But at the same time, you get no responsibility of running this project. Leave it to the professionals. Just leave it.
Absolutely.
So
And that goes that's a mindset thing,
it,
just like we were saying before, people buying out of state, feeling like they have to buy locally. Like it's just a mindset that needs to be broken,
yeah,
shifted and it put on the investor hat, right?
yeah, they go
Because
like, "Oh, we need control." I'm like,
yeah,
"Well, you
no,
do
you
have
don't.
control. You
Yeah.
just don't have maybe the decision-making process." I mean, ultimately, like for example, I just give you an example from exactly what happened. We needed to remove trees, right?
Hmm.
So we're like, all right, we need to call for tree removal services. So let's call for three bids. I'm like, well, you want to be a GP? Why don't you call a few companies in Kansas City and see how much it's going to cost to remove the trees? Oh yeah, I
Hmm.
don't have time. I'll call next week. I'm like, next week? No, 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 next week. You call
No, it's
now
got to get
within like
done.
an hour, because
Yeah.
they said that there's potential, the tree can potentially ruin a foundation
Yeah.
with the roots. So
Absolutely.
we need to
Hmm.
remove the trees right away. So you don't
Hmm.
call next week, you call now. Oh yeah, I'm
Yeah.
sorry, I'm at work. Well, do you
Well.
have any business to be a GP then? No.
Yeah.
But if you're an
Yeah.
LP, yeah, I'll call
Yeah.
for you. I'll tell you who I picked, and
Hmm.
then we'll remove the trees, and basically you get all the benefits. But at the same time, you don't get to you get to focus on what you're doing, and I
Yeah.
focus on what I'm doing, right?
Are you tired of feeling stuck, unsure how to break into real estate investing? Or maybe you've done a few deals, but now you're struggling to scale. You've heard the success stories, you've seen other flip houses or wholesaling properties, and maybe you've even tasted some success yourself. But there's more potential and you're looking for the next step. I get it. I've been exactly where you are. My name is Marco Cabrera, and I spent years building a real estate investing business from the ground up, starting with little to no experience. Now I'm here to guide you on your journey. Through the Investors Club, I've helped hundreds of people, whether they're just starting out or doing a few deals a month, close more deals, scale their business, and build real, lasting success. In the Investors Club, we follow a clear, proven plan to help you succeed in real estate. Learn the basics. If you're new, you'll start with an easy to follow lesson on wholesaling and house flipping. If you're experienced, we'll help you sharpen your skills and identify ways to grow. With the support of our community and practical tools, you'll start finding more deals, improving your processes, and building real momentum. Whether you're just trying to land your first deal or scaling up to six figures, we'll provide the strategies and support to take you to the next level. Now, the only thing standing between you and success is taking the next step. Join the Investors Club community today. It's free, and you'll get immediate access to online courses, resources, and a network of like minded people ready to help you succeed. And yes, it's free. So imagine having the confidence to spot a good deal, the knowledge to close it, and a network of investors to help grow your business. Whether you're just starting or scaling, the Investors Club will guide you from your first deal to consistent long-term success as an investor. Or you can stay where you are, watching others grow, feeling like you're stuck doing the same deals or missing out on opportunities. It doesn't have to be that way. With the right guidance and support, you can move from stuck to scaling. So take action today. Log on to skool.com/investors club. That's Skool, SKOOL.com/investors club. Let's build your real estate future together, whether you're just starting or ready to level up your game. See you there. Yeah, and that's okay if you're a W-2 worker and you have a great job that you make great money
Yeah.
and you have money to invest. Be an LP, be a limited partner, right?
I
Put
want
your
to be
money
a
to
limited
work.
partner. My gosh, I mean, you
Yeah,
make money.
I mean, who wouldn't?
I mean,
You know, and
you
and
you
it,
you literally you do nothing
yeah,
and you make
yeah,
money.
yeah.
So yeah,
You put your money to work. Your best employee is your investment, right? But it's like I try to explain to people too. Um, if you have a full time career, right, and you want to be a GP, you want to be the main guy and the operator, you got to understand what you're doing is creating a whole nother job that you don't have time for,
yeah,
and you're just going to end up losing money in the long run. Let the professionals handle it.
yeah.
I
You're
think you
gonna
said it
burn
the
out.
best.
You're gonna burn
Yeah,
out.
yeah,
That's not it. It's literally like a second job because I have a friend. He works like 60-hour weeks, and he's like, "Yeah, I want to have a joint venture." I'm like, "That's cool. Okay." So when's the last time you went on like vacation, for example? Oh yeah, in like years because I'm so busy at work. And I'm like, and you just told me you wanna be an operator. How are you
yeah.
gonna be an? What are you gonna operate if you're so busy at work? You don't have time to like take a
Sleep.
breath or like sit down or you know how are you gonna do that? What are you
Yeah,
gonna do? Well, yeah, I didn't think about that. I'm like, well, there you go. Being an operator, they think it's all flashy and stuff like that. Let me just tell
nah.
you what I've done last week. I reviewed all the financials from the property manager for the past month. So I was staring at Excel spreadsheets
Uh,
for like a week. So
Yeah,
it's
I
not all.
was having that conversation with somebody. I'm like, they're like, "Oh, the real estate, can I follow you all day or, shadow you?" I'm like, just for the record, my day's pretty boring. It's a lot of analyzing, a lot of numbers, back and forth. The exciting part is the negotiating when you do find the deal. But the reality is, just like anything, right? Fundamentals, doing the boring stuff. And if you do it consistently, you do it well, guess what? You're gonna excel,
Yeah.
you know?
Like I have a whole list of T12s and rent rolls that I have to do and underwrite them, right? So
Fun.
can you underwrite them? Like last year, we underwritten over 280 deals. You want to be a GP? No problem at all. Why don't you
Yeah.
start underwriting those things? You know,
Yeah.
open a
Yeah.
bunch of Excel documents, open up a model, and start doing all that stuff. So it's not all that flashy and fancy stuff that you see on Facebook. People are standing in front of like beautiful pools or whatever. No, no, no. That's what comes after, let's say, 6 months of underwriting and buying that thing and
Yeah.
putting the deal together. So
Absolutely.
it's a lot of work. It really is. I mean,
It is.
it. That's why top guys buy like, let's say, 4 deals a year. Four,
Yeah.
maybe even that. I don't know.
Now, when you say 4 deals, you mean like your type of size deals, right?
The
You're
fairly
talking
large
about how
deals,
many
yeah.
units?
Yeah, fairly large deals. Like last year, it was just a bad year. It was. The rates were astronomical. There was a lot of uncertainty. Insurance was just going crazy. So, There wasn't a lot of trading going back and forth. We picked up four. Another
How many
one,
units was each deal?
yeah.
How many units in each deal?
Oh. So one of them, they were very small. They were not large at all. One was like 48 doors. Another one we picked up was 60.
See, the reason why I ask because it's small in your world, right? But
Yeah,
like
they were
most
not.
people, even like a lot of people listening to this podcast, they're either beginners or doing like house flipping or house hacking. So you say a deal, they might think like, oh, a two family, a three family. What's he talking about? No, we're talking about 48 units.
Yeah,
You did
yeah,
four
yeah.
deals last year, right? Was it four last
Four,
year?
four last year.
How many total units did it equal?
Let's see. So you got 40, 60, so the 100, like nearly 200.
Wow, that's
So there were
awesome. So
four
when you
deals.
say
There were
when you say
four.
that you have a goal of reaching 25,000 units,
As
what steps
LP or GP, I should have added. As
yeah,
LP or GP, it doesn't have to be all GPs. So like right now, I'm near, I don't know, almost 1,000, I should say. I don't know, but you have to set a pretty high goal, because if you think about it, one deal you can do, and it can be like 500 units or 400, and boom, you're already like, halfway, if you break it down into yearly goals or
yeah,
yearly targets, you're like
mhm,
halfway into a yearly target just by closing on one deal. I know an operator I worked with before, they purchased like 700 units, 700 just in one deal. So
that's awesome.
yeah, it's is the number high? Yeah, it's high. But is it doable? Yeah, absolutely, it's doable. I've seen
Yeah,
people just scale in 5 years. They bought 10,000 units. Is it possible? Yeah, if the team's right and you have the systems in place. And also, don't forget, you're not buying them all by yourself. You partnering together. So this deal that I was talking about, the 400 units in Texas, two teams got together to buy this thing because it was such a massive deal. Plus it was a loan assumption play, so it was a lot of moving parts. So two big teams got together and did this. It's not a competition in this space. I mean, there is competition, but mostly it's not. It's collaboration, because by yourself you can't do this. It's not
yeah,
like a single family $300,000 house you can buy a mortgage. No, 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 because you have to prove to a lender that you know what you're doing, you have a business plan, that you can execute it, that you have track record, right? That you have key principles in place so you can get a loan, for example. So there's a lot of moving parts. So there's a lot of partnerships being formed here. It's not like, a team of three people or something like that to just buy everything. You can't.
yeah,
Nobody's going to give you a loan. You can't. No,
yeah,
even a broker cannot trust you when you're like all
yeah.
over the place. That's why it's really important to stay focused in one space and just have your niche. So
Yeah, that's good. So with your goal is to reach 25,000 units.
yeah.
So what steps are you taking to scale up your business?
One of the big things that, of course, it's networking. You have to
Yeah,
network with people. You have to be out there as much as possible. So let's say uh, one of the biggest challenge now, let's say, is equity, right? So what do you do to get equity, right? You can obviously speak with investors, and that's what we do. But you can get in. They can get in with 50,000, right? Your typical investment is 50,000. So how many of those investors you need to buy a building? If you're raising, I don't know, $5 million, you need a lot of them, right? So the
yeah,
easiest way is speak to family offices, right? Family offices, for example, have millions of dollars, so that you can scale higher. So they can just stroke a check for 5 million, and you can close a deal in a second, right? Well,
yeah,
not a second, but in 2 months. You don't have to struggle with a raise. So it's really important to focus on where is the money going to come from. Like, right, for example, if you need some emergency funds, do you have somebody that can lend you the money? Yeah, we do have that. We have a person that can literally write a check, but then he wants that money back, as soon as you raise. So it's really important to uh, connect with people that can really help you grow faster. So let's say there is an amazing deal, like amazing deal, but you need to raise 10 million. Ask yourself, can you raise $10 million? Right? So if you can't, then don't bother looking at the deal, right? You can't.
yeah,
You,
yeah,
you, you won't be able to close. So, but if you have backing of, let's say, wealthy individuals or wealthy companies or stuff like that, they can just write a check for 5 million right away, and you can close the deal, no issue. So that's what
Yeah.
we're focusing on now, building strong relationships with uh, high-end individuals. But still, we're always talking with private investors who want to get in, and who want to try real estate. They're like, yeah, I'm kind of tired of the stock market.
Yeah.
It just fluctuates. It jumps all over the place, and I don't know what to put my money into. I don't want to, have the money sitting in savings account or something like that because it's not making much. So if you have the money to invest, and of course it shouldn't be your last money, because there's risks everywhere, but we're trying to mitigate them, and you want
Yeah.
to get into real estate, then yeah, that's the way to go. 50,000, you'll most likely double your money in 3 to 5 years, and a lot of people don't understand it, they don't see it, but yeah.
So do you have like a minimum entry fee, like amount?
Typically it's 50,000.
50,000.
Yeah,
Okay.
that's kind of straightforward. That's typical. Did we take less? Yes. Like for example, if we closing the raise, and all we need, let's say, is 25,000 or something like that, or even 30, we'll accept the 30. But typically, we kind of go for 50 and up. It's just easier on accounting, and it's just better numbers that way. And of course, we accept 1031s as well. A lot of people want a 1031 into a syndication, and retirements account, like self-directed IRAs, things like that. So that's pretty easy. That's pretty straightforward.
Awesome, man. So what advice would you give someone just starting out in multifamily real estate investing?
Well, like I said, get coaching. That's important. Also, don't give up. It's a long road. For me, it took nearly 8 months to get my first deal because I was very careful, without knowing anything in multifamily space. For other people, if it taken faster. For some, I know it's like 2 years and no deals. So it takes a while. It takes a while, and most importantly, you got to grind it out because you're not going to see the results right away, right? As an operator, you get paid last. Don't forget, you get paid last.
Mhm.
Who gets paid first? The bank. The bank gets paid first, always. Yeah, they
Always.
they get paid first, and
First
then
position.
yeah, exactly. So then you have the limited partners coming in, right? Oh, based on the waterfall, but that's how it typically is. Like first, let's say our 8 pref, right? So first 8% of the profits go to a limited partner. So whatever money coming in, and we have distributable cash, goes to a limited partner. So first 8% goes there. So we get paid last after we exceed our performa, after we exceed expectations. And then
Yeah.
after we sell, of course, everybody shares the profit. So
Yeah.
that's the thing. So please make sure that if you want to start, like I started, I have all these projects. Do I have the money coming in? Yes, some, but not. I can't just stop, or I can't retire, or I can't quit being a real estate agent in New Jersey because I need active income to support my lifestyle. And trust me, I don't have a fancy lifestyle or anything like that. I don't.
No red Ferraris or
No
anything?
red Ferraris, not at all. Absolutely not. So, uh, I don't live in a huge mansion or anything like that. It's like a regular 2,000 square foot house, and I'm very happy. Um, I,
That's good.
I don't need anything that fancy. I just need
Yeah.
peace. So that's the most important thing. So please
That's
be
good.
aware that first 3 years until that liquidation happens, or a refi or something like that, you're not gonna make any money, or very
Yeah.
little anyway. So
Yeah.
it's really important to have another job,
Yeah.
or
That's good, man.
another income stream, I should say.
Another income stream. Absolutely. So what's the most important lesson that you've learned in your real estate journey?
I would say partnerships. Yeah, that's the most important thing. Forget about finding perfect deals or anything like that. The first thing you should be looking for is partners. That's the most
Good.
important thing. And just jump, don't just jump in with them. Literally, just find out who they really are. Like, not just if they know stuff, that'll come. It's fine.
Yeah.
Find out if they're hardworking, how good of a person they are. I mean, if they, if you have a partner that's like, oh yeah, every check I get, I spend, everything, and he's in debt. You're like, yeah, do you really want that person as a partner? Because he's just going to ruin the balance sheet, right? Just
Yeah.
think about it. He's totally unpredictable. Uh,
Hmm.
so it's really important to vet your partners. Just are they a good person? Do you want to work with them? Are you okay looking at them every single pretty much day or talking to them for the next 5 years?
Yeah.
If you're okay with that, then yeah, jump in. But if not, then or like some people say, hey, listen, I'll do this, but I want to be hands off. Well, if that's negotiated beforehand, that's fine. But
Yeah.
in many cases, you have to vet them. That's the most important thing. Partnerships are the key to this. I've seen so many
Yeah.
great deals could be better, or at least would be still great if the partners just didn't have any disagreements, because as
Yeah.
soon
Or if they did the right
as it
thing.
happened,
Mhm.
it doesn't matter how good the project is, the whole thing just fails. So it's really
Yeah.
important to vet your partners carefully. Forget about deals, look for partners first.
Yeah, that's great advice, man. Partnerships is very important in real estate, but just in life in general,
Yeah.
right? Even your marriage is a partnership.
Yeah,
Make sure you're aware of who you're marrying and that you guys have the same vision and are aligned for what kind of future you both want,
it's the same
right?
thing. It's actually the
It's the
same
same
thing in
thing.
business.
Partnerships is a key to life.
Yeah. It's the
Yeah,
same thing in business. It's literally
yeah,
like a marriage. Just
yeah,
a lot of people make that analogy, and I didn't get it at first, but it is, because you're going to be
yeah,
stuck with that person for 5 years. And let me tell you, some marriages don't even last 5 years. So
I've
yeah,
seen it.
so
Yeah,
make sure you really vet your partners, and not just one, but all of them, and
yeah,
find out like important stuff, like really, because and ask uncomfortable questions. It's okay. Like for example, my partners ask me like, "Are you married?" I'm like, "Yeah, I'm married." Happily? I'm like, "Yeah, happily." What do you mean? I'm like, just curious. Why would you even ask this? He's like, "Well, because before he was partners with somebody, and the partner was getting a divorce, right? So the wife said, 'I own half of the building, so I need half of the proceeds.' So instead of selling, they couldn't sell until this whole thing got settled
Wow. So
settled
everything was on
in
hold.
court. So
Yeah,
it was a small joint venture. So luckily, not a lot of people lost money or anything like that. I didn't ask, but yeah, now he's like super careful and asking these quote unquote uncomfortable questions, like, "Are you happily married?" or something like that. It's important to ask them, and no question is a dumb question or uncomfortable question, because it's important to know who you're really getting into deals with. Because don't forget, it's a lot of money. It's a lot of money you're
yeah,
really putting together.
yeah,
And a lot of people don't gel together. So that's why you see those partnerships. A lot of them are falling out, and
yeah.
stuff is kind of
No, but that's good. Asking those uncomfortable questions. I like that because you're going to catch somebody off guard.
yeah.
So the reaction is probably their real reaction, something they're not prepared for. So how they respond is it's really going to get you the probably the best answer that you could
Yeah, and
ask for.
ultimately just talk to them, just like you talk to a friend, right? Like I have few friends that I still talk to from high school, and we meet pretty much all the
Good.
time every Saturday. I ride motorcycles, right? So they ride
Nice.
motorcycles too. It just happened that way. So now we go riding all the time, and I see them and I like them. I don't mind hanging out with them. But some people just have different interests, so they're like completely like fell off, and they're doing their thing, so you don't see them as much. So it's kind of
Yeah,
the same thing. It's more of a friendship. So the
absolutely.
stronger the bond is within the company, the better the company will be.
That's awesome. Yeah, that's good stuff. I also have friends from high school. Actually, I have my neighbor. He's friends with people from like elementary school. They link up every year, which I thought was pretty cool.
That is cool.
But that's good, man. That's fruit of good partnerships, right?
Yeah.
So Vlad, I mean, we could stay on here for a while. I'm sure you got a busy day. So do I. But before we end, why don't you let the people know where they can find you, where to follow you, and a little more information?
Yeah, so I'm all over social media. I have a very unique name, Vlad Arakcheyev. So you just kind of Google me or go on YouTube. I have a channel there. It's called Wheels. Wait. It's called We. I can't believe I forgot it. No, no, wheels and real estate deals. Yeah, so I
Wheels
kind of
and wheels.
combine my passion of motorcycles and real estate, and I kind of
Awesome.
put them together to, I don't know, educate. I'm not gonna like draw numbers on a board and tell you what IRR is or anything. There's plenty of other people that do that. I'm just kind
Yeah,
of there to entertain and really put myself out there and show the lighter side of real estate.
that's
Um,
good.
and of course, I'm on Facebook. I'm on LinkedIn. I do Instagram. Also, when it comes to motorcycles, I don't dance on there or show my cats or anything like that, even though I got three. But yeah, I'm kind of all over social media. Written a book with partners in
Nice.
December. So while everybody was, celebrating Christmas and New Year's and stuff like that, we were writing a book. So
Nice.
just that's the life of an investor. So but still it was a
Absolutely.
lot of fun. You can find it on Amazon.
No, yeah, that's good, man. Well, thank you for being on our show. Really appreciate it. You dropped a lot of, knowledge, some powerful tips, and some gold. I'm sure our listeners are going to definitely appreciate it. Hey, guys, make sure you follow us on all our social media platforms. Make sure you like and comment in this video. See you guys next episode.